call contains forward-looking statements within the meaning of Section 27A of the Securities Act of 1933 as amended and Section 21E of the Securities Exchange Act of 1934 as amended that involve risks and uncertainties. In some cases, you can identify these forward-looking statements by the use of terms such as expect, will, continue, or similar expressions, and variations or negatives of these words. But the absence of these words does not mean that a statement is not forward-looking. All statements other than statements of historical fact are statements that could be deemed forward-looking statements, including, but not limited to, any statements regarding the expected timing of the completion of the transaction and the benefits of the transaction, the ability of Dialog Semiconductor plc and Adesto Technologies Corporation to complete the proposed transaction considering the various conditions to the transaction, some of which are outside the parties' control, including those conditions related to regulatory approvals, any other statements of expectation or belief, and any statements of assumptions underlying any of the foregoing. These forward-looking statements are inherently uncertain and are based on information available to each of Dialog and Adesto as of the date hereof and current expectations, forecasts, estimates, and assumptions. A number of important factors and uncertainties could cause actual results or events to differ materially from those described in these forward-looking statements, including, without limitation, the failure to satisfy or waive any of the conditions to the consummation of the proposed transaction, including the adoption of the merger agreement by Adesto's stockholders and the receipt of certain governmental and regulatory approvals, matters arising in connection with the parties' efforts to comply with and satisfy applicable regulatory approvals and closing conditions regarding to the proposed transaction, the risk that the proposed transaction does not close when anticipated or at all, the effects of disruption from the transaction contemplated by the merger agreement or on Adesto's or Dialog's business, and the fact that the announcement and pendency of the transaction may make it more difficult to establish or maintain relationships with employees, suppliers, and other business partners. The occurrence of any event, change, or other circumstance that could give rise to the termination of the merger agreement, the outcome of any legal proceedings that may be instituted against Adesto or Dialog related to the merger agreement of the proposed transaction, unexpected costs, charges, or expenses resulting from the proposed transaction, the occurrence of a material adverse effect as defined in the merger agreement, and other risks that are described in the reports of Adesto filed with the Securities and Exchange Commission, the SEC, including but not limited to the risks described in Adesto's annual report on Form 10-K for its fiscal year ended December 31st, 2018, which was filed with the SEC on March 18th, 2019, on Adesto's quarterly reports on Form 10-Q, and that are otherwise described or updated from time to time in other filings with the SEC. All forward-looking statements attributable to Adesto or Dialog or persons acting on behalf of either are expressly qualified in their entirety by this cautionary statement. Further, Adesto and Dialog disclaim any obligation to update the information in this communication or to announce publicly the results of any revisions to any of the forward-looking statements to reflect future events or developments, except as otherwise required by law. Readers are cautioned not to place undue reliance on these forward-looking statements that speak only as of the date hereof. In connection with the proposed acquisition, Adesto will file relevant materials with the SEC, including a preliminary and definitive proxy statement. Promptly after filing the definitive proxy statement, Adesto will mail the definitive proxy statement and the proxy card to the stockholders of Adesto. Adesto stockholders are urged to read the definitive proxy statement, including any amendments or supplements thereto, carefully when it becomes available before making any voting or investment decision with respect to the proposed transaction, because it will contain important information about the proposed transaction and the parties to the proposed transaction. Stockholders of Adesto will be able to obtain a free copy of these documents when they become available at the website maintained by the SEC at www.sec.gov or free of charge at www.adestotech.com. Additionally, Adesto and Dialog will file other relevant materials in connection with the proposed acquisition of Adesto by Dialog pursuant to the terms of the merger agreement. Adesto, Dialog, and their respective directors, executive officers, and other members of management and employees under SEC rules may be deemed to be participants in the solicitation of proxies of Adesto stockholders in connection with the proposed acquisition. Stockholders of Adesto may obtain more detailed information regarding the names, affiliations, and interests of certain of Adesto's executive officers and directors in the solicitation by reading Adesto's most recent annual report on Form 10-K and the proxy statement for Adesto's 2019 annual meeting of stockholders, which was filed with the SEC on April 30th, 2019. These documents are available free of charge at the SEC's website at www.sec.gov or by going to Adesto's Investor Relations website at www.adestotech.com. Information about Dialog's directors and executive officers is set forth in Dialog's Annual Report and Accounts 2018. You can obtain free copies of this document by accessing Dialog's website at www.dialog-semiconductor.com. Information concerning the interests of Adesto's participants in the solicitation, which may, in some cases, be different than those of Adesto's stockholders generally, will be set forth in the definitive proxy statement relating to the proposed transaction when it becomes available. I will now hand it over to Jose Caño, Head of Investor Relations at Dialog Semiconductor, who will open the call. Mr. Caño, please proceed.
Thank you. Welcome to the conference today. I'm joined, as usual, in the room with Dr. Jalal Bagheli, our CEO, and Wissam Jabre, our CFO. I think you guys heard all the forward-looking statements that could be made, so I'm just going to hand over to Jalal to get on with the presentation. Jalal, over to you.
All right. Thank you. Good morning, and thank you for your patience for the start of this conference. Thank you for taking time to join us today. I'm very pleased to speak with you all about the acquisition of Adesto Technologies that we announced earlier today. Before we dive into the benefits of the transaction, I'd like to provide some background on Adesto. The company is headquartered in Santa Clara, California, and has a strong team of about 270 employees. Adesto is a leading provider of embedded systems, innovative custom ICs, and specialty memory for industrial IoT markets, or what is commonly referred to as Industry 4.0. In our view, there are multiple benefits of this transaction, and on slide 3, I'd like to focus on the main 3 benefits: market expansion and diversification, strengthened portfolio, and value creation. Let's break them down at this level. First, we are expanding our addressable market. To put it simply, this transaction gives us access to new growth segments in the industrial IoT market. Adesto's technology and IP enable seamless connectivity of heterogeneous systems in an industrial environment to the cloud for building and industrial automation. These capabilities, together with Dialog's portfolio in factory automation from the acquisition of Creative Chips, will allow us to deliver fully integrated solutions to over 5,000 customers, the majority of which are new for Dialog. Second, we are strengthening our product portfolio with this unique combination. For example, Adesto's industrial wired connectivity portfolio perfectly complements Dialog's leading wireless portfolio, which we can now target for smart buildings and industrial applications. Cloud connectivity adds further differentiation to Dialog's existing industrial solutions. Additionally, the combination enables full system solutions for applications including wearables, hearables, and IoT by combining Adesto's low-power specialty memory products with Dialog's BLE and Wi-Fi connectivity and true wireless stereo audio ICs. Third, this transaction creates long-term value for our shareholders. The acquisition is expected to be accretive to underlying EPS and to generate annual cost synergies of approximately $20 million within the first calendar year after close. The cost synergies are expected to come from identified efficiencies as well as improvements in the supply chain across the combined company. Additionally, for reasons I'll cover later, we also anticipate considerable revenue synergies from the deal. Now let's move to slide 4 to remind you briefly about our diversification strategy. In November 2018, we shared with you our plan to build a diverse, low-power mixed-signal business. We have made very good progress throughout 2019, launching new products and expanding our presence in automotive and IoT. In addition, we have continued to invest in the inorganic expansion of our business. The acquisition of Adesto is allowing us to expand into attractive growth segments of the industrial market. We identified the industrial market as an attractive market, complementing our low-power mixed-signal capabilities. Our strategy is to build upon this to capitalize on these capabilities in the future. Creative Chips was our first initiative in the industrial market, bringing industrial IoT custom silicon expertise and products, as well as an established Tier 1 industrial customer base in Europe. And as part of our connectivity strategy, we added low-power Wi-Fi to our product portfolio with the acquisition of Silicon Motion's Mobile Division Group, STI, which addressed broad IoT applications. Turning to slide 5, let me run through the benefits of combining Adesto and Dialog technologies. If you think of a building automation application, the block diagram on the right is illustrative of the typical components used. As you can see, the combination of Adesto wireline transceivers and specialty memory, together with Dialog's wireless connectivity portfolio, power management ICs, and CMICs or configurable mixed signal ICs, will give us a more complete product offering to cross-sell to our expanded customer base. In addition, Adesto products can be sold to Tier 1 industrial customer base we acquired with Creative Chips. Adesto has a broad range of products that can address markets they have not yet entered. These products create interesting opportunities to unlock future growth and value. For example, in the automotive market, our plan is to leverage our proven automotive qualification and test process to qualify Adesto's specialty memory products, delivering the high-quality standards demanded by the automotive market. Additionally, the features of the specialty memory portfolio are well suited to addressing the emerging, fast-growing artificial intelligence segment in the market. Finally, as you can see from the picture on the left, Adesto's technology enables seamless connectivity to the cloud, powering smart buildings and industrial automation systems, adding further capabilities to the portfolio from the acquisition of Creative Chips. Let's move on to slide 6 to further discuss why Adesto is the right fit for Dialog. Adesto's product portfolio and end market exposure perfectly complements our own focus end markets. In particular, this transaction expands our product offering in industrial and IoT, as well as enabling future revenue opportunities in automotive. In addition, with Adesto, we are welcoming a highly skilled team of engineers and designers with a proven track record of delivering complex custom mixed signal ICs and a world-class library of IP assets. Together with our own capabilities, I'm confident we have one of the largest and most experienced custom mixed signal design teams in the industry. Our combined product portfolio will deliver increasing value to an expanded customer base and create multiple cross-selling opportunities. Talking about customers, on slide 7, I'd like to run through Adesto's customer base. More than 5,000 customers worldwide use Adesto's range of products across the industrial, consumer, medical, and communications markets. We will now have access to new Tier 1 industrial customers such as Honeywell, ABB, and Schneider Electric, where we will have multiple cross-selling opportunities. As you well know, many customers prefer to buy entire solutions from a single vendor. By bringing Dialog and Adesto together, we can offer an extended product portfolio and full system solutions, delivering added value to customers and creating stronger and long-lasting customer relationships. Let's move on to slide 8 to run through the advantages that the combination of Adesto and Dialog will bring to customers in our target end markets. First, we are well positioned to provide end-to-end solutions that will enable industrial cloud connectivity to new customers. Everything from the connectivity IC for an HVAC system to multi-protocol communication modules, all the way to servers that can connect to cloud analytics. The result of all this is delivering fast, accurate information to more efficiently automate and manage industrial equipment, buildings, and cities. Second, we are expanding the depth and breadth of our technology and custom IC capabilities with experienced IC design teams with a strong track record in complex mixed-signal design applications. And third, in the IoT market, I estimate we have already supplied over 100 million units of our PMIC, Bluetooth Low Energy, and audio ICs alongside Adesto specialty low power memory products into common applications such as hearables, wearables, tags, and proximity sensors. We can offer these customers even higher performance solutions through either the integration of the specialty memory technology into our IoT connectivity audio SoCs or combining them in an innovative system and package solution. Additionally, as outlined earlier, we can also bring these products to the automotive and artificial intelligence markets. Let me summarize on slide 9 the main strengths of the business combination. By acquiring Adesto, we are increasing our addressable market, targeting new growth segments of the industrial IoT market. This will be possible with a comprehensive product offering which complements our existing portfolio. We're welcoming a team with strong mixed signal and system expertise for the industrial market. With over 5,000 customers, the majority of which are new for Dialog, the combined business will provide a solid platform from which we can leverage an established sales channel. And last but not least, we are targeting cost synergies of approximately $20 million from identified efficiencies as well as improvements in supply chain across the combined company, in addition to considerable revenue synergies. Before we open the line for questions, let me leave you with a few final remarks on the next slide. The agreement is to acquire the outstanding shares of Adesto for $12.55 per share in cash, or for approximately $500 million of enterprise value. We are funding the deal from Dialog's balance sheet, which at the end of December 2019 had over $1 billion in cash. Again, the transaction is expected to be EPS accretive, and we expect annual cost synergies of approximately $20 million within the first calendar year of close based on Adesto's expected financial year 2019 results. We also anticipate considerable additional revenue synergies given the complementary nature of the product portfolios and technology. Adesto expects to report financial year 2019 revenues of approximately $118 million, and we anticipate continued revenue growth over the next few years. The transaction is subject to certain regulatory approvals and customary closing conditions, including the approval of Adesto stockholders, and is expected to close by the third quarter of 2020. In summary, please allow me to emphasize the key takeaways. First, we are expanding into growth segments of the attractive industrial IoT market. Second, we are strengthening our portfolio with highly complementary products. And third, we are accelerating our business expansion and diversification strategy, all of which make me incredibly excited about the future. Operator, please open the line for questions.
The first question we have is from Sandeep Deshpande from JP Morgan. Sandeep, your line is now open.
Thank you for letting me on. I have two questions, if I may. Firstly, on these memories, will you be embedding their memories into SoC, or is it intended that you would be selling an IoT solution consisting of multiple chips? And then secondly, in terms of product development for using Adesto's technologies, is it intended that you will create again again, I mean, the same question in a different way, SoCs, or is it that, you're going to be cross-selling to their customer base using your products, which are complementary with Adesto's products? And then finally, on the synergies itself, could you help us understand what restructuring costs, if any, you expect?
So what cost?
The restructuring costs.
Okay. So thank you, Sandy, for those questions. So let me try and answer those. So I think there is timing issues. So there's the short term. In the short to medium term, my expectation is that we supply memories, products with specialty memories to customers who need them for embedded systems. And for cross-selling, in addition to our, for example, Bluetooth or Wi-Fi or other products that we have for embedded or IoT markets. So that is in the short to medium term. Over time, they have expertise in flash memory design and some innovative memory architecture that we will come back and discuss. We alluded to, for example, some technology they have that is applicable to even AI market. So over time, as the engineering teams get together, we will look at also embedding where it makes sense, embedding differentiated memory architectures into our SoC products for Bluetooth, Wi-Fi, or indeed a microcontroller type system, because we have ARM-based chips that we can use embedded flash to improve the system performance. So is a short term versus medium term, and we're gonna do both. The other thing we can do is in the short term, in addition to supplying discrete chips, if you like, we could also look at doing system in package. So that would be SoCs combined with a memory in a SiP package. So that's kind of an intermediate solution where customer can gain space and cost benefits, and they get a bigger, if you like, piece of the solution in one package. In terms of synergies, I don't think we've detailed the cost of it out, but my expectation is this $20 million is the cost that they can take across the company between the Adesto and Dialog. And I'll let Wissam also comment on this.
Yes, Sandeep. In terms of the restructuring cost, it's really not expected to be high. We're expecting it to be sub $5 million at this point. And the cost synergies, as you'd expect in such a transaction, it's typically some eliminating duplicate functions, as well as corporate overhead in terms of the public company costs and so on, and also through the combination, we'll get supply chain efficiencies and other types of cost reductions.
Thank you.
You're welcome.
Our next question goes from Jürgen Wagner from MainFirst Bank. Jürgen, your line is now open.
Let me on. Good morning. First on the process, can you say more? Was it a structured bidding process? And looking at the latest handout of Adesto, they targeted 20 or more than 20% growth. That sounds like more than others in the space are targeting. Can you comment on that a little bit? Thank you.
Hi, Jürgen. Good morning. I think the acquisition process goes through banks and they run process. So I don't want to comment on the rest of the process. We obviously went through a process, and these are public companies, and I think in the US they will be filing the whole process with the SEC later. So I don't want to say something that I'm not sure all the exact details. It's not appropriate for me to comment. The second piece in terms of the growth. So if you look at the publicly published information in the past years, they've had a track record of growth with high growth rate. So for example, in 2017 to 2018, they went from $56 million to $83 million. From 18 to what we expect 19 to be 118 million. Again, another double-digit growth. So part of this growth has been because they've selected good areas of market to focus on. Part of it is through the acquisitions they've made in 2018, 2019. But our expectation is that their growth will continue to happen as a standalone business. But of course, the addition on the Dialog means that we have also this cross-selling opportunities and combination of technologies that make a lot more sense to customer to buy as a solution than buying, fragmented sort of part of the chipset, if you like. So that's where we stand.
Okay. Thank you.
You're welcome.
Our next question is from Aditya Matuku from Bank of America. Aditya, your line is now open.
Yeah, good morning, guys. So I have 4 questions, if I could. Firstly, just looking at the free cash generation for this company over the last 3-4 years, they don't seem to have generated any free cash flow. I just wondered if you could comment on the reasons behind this and how we should think about this going forward. Secondly, 60% of the revenues came from memory, and I just wondered if you could give some color on what type of memory this is, and does it increase Dialog cyclicality as we look into the future? The third point is obviously Adesto reports on the US GAAP and you report on the IFRS, and I know you guys do adjusted metrics, but how should we think about, when we think about the accretion in our pro forma models, how should we think about capitalization of R&D, any margin uplift that we should think about, anything related to share-based comp that we should keep in mind, and especially given when you look at Dialog, 10% of your EBIT, IFRS EBIT goes away in share-based comp. So anything around those that we should think about when we update our models? Thank you.
What was your fourth question? I only captured 3.
Sorry, that was 3.
I think there was plenty, by the way. So let's stick with 3. Okay. So no free cash flow. Okay. Very, very good observation and correct. So, and again, companies in semiconductor space, which are small and growing, they don't make money until they reach scale. So if you look at, as I said, for example, if you go back to 2016, they had $44 million revenue. 17, they had $56 million revenue, right? So it's only in 19 that they're crossing the threshold of 100 into 118, as we've explained. So most of businesses that we come across are of the same type of approach when they're small or startup. Obviously, that you don't expect them to make money. They've been public, I guess, couple of years, and if you look at the same numbers, you can see continuous improvement towards break-even and profitability year on year for the last 3 years. So, given that they're now over 100, and given that we've talked about taking $20 million of OPEX out, we have no doubt that we will be generating good profits by the end of calendar year as we projected in our press release. So question 2, 60% memory, very correct. Yes, they started as a memory company. They're very much specialty memory. So the type of memory they specialize in are NOR flash. So it's a non-volatile memory, quite niche related to embedded systems. So, and they do both, if you like, specialty memory for IoT as well as some standard NOR flash. But all of these are targeting, again, embedded type application, niche applications. Will it add cyclicality? It would have if it was the main market for memory, mainstream memory. But these tend to go into like smart metering. There is some consumer, some medical, so it's not pure industrial, but most of it is targeting industrial and embedded, which they tend to have long cycles of usage. and not so volatile. So I don't expect this to be, actually I expect this business to be less volatile than our mobile business. So hopefully that answers your question. Number 3, I think I'll hand over to our expert on finance, which is our CFO, so answer the US GAAP issue.
Thanks, Jalal. Thanks, Adi, for the question. So on the IFRS versus US GAAP, as you rightly pointed, obviously in IFRS we would have the opportunity we will need to capitalize R&D, part of the R&D investment. But when we think of the accretion and the way what we're communicating here is in the first full calendar year post-closing, we do expect the business to be EPS accretive to our numbers. And when you think of the long-term model, it fits very nicely with our long-term model once we get to the first full calendar year. And that's the long-term model that we communicated back in November. In terms of the share-based comp, it is, as you rightly noted, excluded from our underlying figures. But I don't expect it to. I mean, this acquisition, I don't expect it to be to add a magnitude huge numbers to our share-based comp. It shouldn't be. It will not add a lot to our share-based comp simply for this acquisition. So again, on the accretion, it is expected to be accretive in the full calendar year. And as we deliver on the synergies, we expect it to fit very nicely within our long-term financial model.
Understood. Just one quick follow-up on the memory on NOR flash. When I look at the market shares for NOR flash, I don't see them at least in the top 10 players. What level of market share do they have? How
Okay, so listen, this is, as we said, the total business is 118 million in 2019, 60% of which is memory, right? So it's not a massive, commodity memory play. So the ones that you see usually is people who supply, everybody in the market, and they're chasing every memory opportunity. This is for industrial embedded type solutions, which they grow gradually and they're fragmented and, small volumes by customer. And this will grow. So for example, they announced some partnership in the past year with NXP. So they will have specialty memory that fits with NXP's IMX series processors, application processors. They've announced things with SD micros type processors. So as those processors go into different industrial application, in factory automation, measurement, instrumentation, lighting, and whatnot, these memories get used. So they're not chasing mainstream volatile sort of memory markets. That's why you don't see them in top 10, because they're not that big to be in top 10.
Understood. Thank you.
You're welcome.
Our next question is from Robert Sanders from Deutsche Bank. Robert, your line is now open.
Yeah, maybe I missed this or I didn't see it, but could you just break down the revenue between industrial, consumer, and auto for Adesto? I've got a couple of follow-ups.
No, we don't split that. We just acquiring the company, so we will be more, post-integration. We can then, explain that a lot more. But is, I guess, suffice to say, majority of the business is industrial, but they don't have a lot of automotive, so that's clear to say. But they do have medical, and they do have comms, and they have consumer as well.
Got it. And one of the sockets they've got is the AirPod. How do you see the confidence on this socket, given that it could be a potential growth driver in 2020? And then the last question would just be for Visam. In which year do you think your return on capital on this deal will actually be above WACC, and what WACC are you assuming on this, rather than just talking about accretion, which is a pretty academic thing, given you're paying in cash and the interest rates are low? Thanks.
So let me take the question on the. So I don't want to comment specifically on a customer socket, but what I would say is that we have confidence in the projections that we've talked about in terms of the 2019 continuing with their growth into 2020. But we can't talk about specific customer sockets one by one. So.
Yeah, and with respect to your question, Robert, obviously the transaction was evaluated relative to the WACC of the company on standalone and our WACC, and we're very comfortable that we would be returning higher than the cost of capital on this deal.
Is that by
so
year
it's not, yeah.
year 3?
Well, I expect it to be, as we said, at the end of the first full calendar year, or the first full calendar year, would be close to where our long-term financial model. So I would say somewhere between year 1 and year 2 would be in a place where we start returning the cash on the cost of capital.
Got it. Thank you.
You're welcome.
The next question is from Didier Shimama from Bank of America. Didier, your line is now open.
Good morning. Thank you, and congratulations for the transaction. I just wondered if you could talk about the competition facing Adesto. If I look at their annual report or 10K, it looks as though they name a number of Taiwanese and Chinese competitors, including Micronics and Winbond. I assume Giga Device, also a competitor out of China. Micron is named. So I appreciate this is not a commodity memory business, but it looks like their competitors are in the commodity memory market. So I just wondered if you could just qualify the competition. And related to that, to give us a bit more confidence on the business you're acquiring, can you talk about the length of the contracts, especially the pricing, the length of the pricing agreements that you have with the core customers of Adesto? That'd be helpful. Thank you, in terms of visibility.
Good morning, Didier. So I think, our understanding is you're correct. We've read the same documents, in our due diligence, and we believe, flash memory, as we said, the NOR flash, not NAND flash. The NOR flash are the guys that you mentioned. Some of them are only participate in the standard NOR flash. Some are in other kinds. Adesto does both. They do have standard NOR flash, but again, it depends on your customer target. And secondly, they have proprietary. So the proprietary are all unique products. There is no direct competitors. A customer can choose to design a system in a multiple ways. So it depends how optimized you want to make the system and what quality, right? So there's a whole spectrum of gray here, right? So if you want to cut on quality and have a lower cost sort of components, you can do that. Depends what features you're building in. So I think in some areas they have no competitors for memory. In some areas there are dual stores for standard products with some of the Asian suppliers that you mentioned. But the source of supply is Asia in any case. So there isn't a big problem in terms of cost base. But of course, you could argue the supply from Asia could be cheaper on their margin, and they are quite often. So I think many of the customers, particularly outside Asia, when they choose suppliers for products that they care about in terms of quality, they would like a Western supplier to be on hand to explain and to support and to stand behind the product rather than buying the cheapest possible from Taiwan. So that would be my answer to that. In terms of length of customer contracts, I think you'll find that it's not that different to rest of the semiconductor industry in that you get visibility and you get forecasts. Nobody gives you long-term contracts on any products that I'm aware of. And, it's just within typically a quarter to 2 quarters, you have beyond that is pretty much a forecast, and we are confident from what we've seen that they have good sockets with good prospects, but they are not going to be any different to ourselves and any other semiconductor deals that we've seen, in the sense that people give you contracts for the next quarter, and beyond that is really rolling forecast.
Got it. Thank you. Can I have a quick follow-up?
Sure.
just looking at the slide deck that you put together, there is a product that seems to be a glaring omission in your portfolio, particularly as you target the IoT market and as your competitors in the broader market all have that as a core IP anchoring design wins. It's microcontrollers. Presumably you've got the IP inside the company as you've got an ARM core license. Can you talk about the longer term direction as you pivot your model away from, smartphones into the industrial IoT markets? Thank you.
Absolutely. So actually, on slide 4, we have shown a microcontroller there on the block diagram, but we haven't colored it Dialog, just purely to reflect the commercial status today, which we are not in the generic microcontroller business. I think people confuse two things. Let's not confuse the technology for microcontroller versus a microcontroller franchise. Okay? So we are not a microcontroller franchise company. We don't have the distribution, the software platforms and the 20 years of relationship with, small guys, because we came from a different background. The way we approach it is through the SoCs we make. They all have ARM core. Actually, they have multiple ARM cores. So our Bluetooth chip, for example, has 2 ARM cores, one small one for running the Bluetooth stack and a bigger, more capable one to run the applications. So there's no real difference between that and a microcontroller. In fact, I know of at least 3 customers that use one of our, if you like, the higher end Bluetooth chips, and they call it wireless controller because they use it actually primarily to access the main ARM core and the fantastic peripherals and the power management they built in. And they have the option to turn on or turn off the Bluetooth later in their application if they want to use the Bluetooth radio. So if you see what I mean, we are coming from SoC into this rather than sort of jelly bean microcontrollers, but we have all the technologies we need for that. Yes, you're right.
Okay, lovely. Thanks very much.
You're welcome.
We have another question again from Robert Sanders from Deutsche Bank. Robert, your line is now open.
Yeah, just a quick follow-up actually to the previous question. I mean, when you look at Nordic versus you're in Bluetooth IoT, Bluetooth low energy, they have a big ecosystem. They develop software, etc. The developers have bought into the platform. It does seem in industrial that you're still quite far away from building relationships with the key developers on the other side. So what are you actually doing there to build a kind of platform business, and how are you going to avoid having to spend big money on marketing, free developer boards, building software platforms, etc., in order to build kind of mind share with these industrial customers? Thanks.
So Robert, our approach has been really coming from segment identification rather than broad brush sort of distribution so far, right? So this is why we are so successful to be number 1 in the, for example, fitness tracker market, and our competitors are nowhere to be seen. We've expanded our revenue base based on targeting specific high volume application where we've added both from a silicon point of view differentiation as well as software. So in case of, for example, fitness trackers, as we've explained, we integrate sensor interfaces, power management, memory interfaces onto the Bluetooth chip. So it's not just a regular Bluetooth chip. This is why it's difficult to compete. I'll give you a second example. We just launched a few months ago, a couple of months back, the product called Tiny, which is our smallest, lowest cost in the world Bluetooth offering, right? This is for pure IoT. And guess what? The first segment that we targeted this with, actually we designed it with that in mind, was the connected health. Okay, so we're not chasing everybody else's success. We have our own success to grow. Connected health is an up-and-coming nascent market, and we have everything in place, including customer relationship, engagements to grow there. So these are the stuff we've done using our own products. And we've added Wi-Fi that other people don't have. There's low power Wi-Fi helping with expansion in IoT. Now, this acquisition gives us access to those 5,000 customers that we didn't have, which gives us that, one more step towards the broad market addition to where we are successful already with Bluetooth. And you can look at our Bluetooth revenue growth, and I don't need to talk about it. You can look at the numbers, and you can see we're taking market share like crazy. We are growing 30, 40% a year. We're not messing around with 1 or 2%. Okay? So we are we are number 2, but we are the highest growth Bluetooth low energy chip on the market. So I have no worries about what everybody else has done for 10 years because we've done it in 3 or 4.
Okay, thanks a lot.
You're welcome.
As a reminder, ladies and gentlemen, to ask further questions, please press star followed by 1 on your telephone keypad. There are no further questions on the line. Oh, we have one again from Didier Shemama from Bank of America. I think it's a follow-up question. Didier, your line is now open.
Yes, thank you. I just wondered also on Adesto, it looks like they missed their Q4 guidance, so above 118 as far as I can see on Bloomberg. Do you have any color on that? And are you concerned at all by the miss? Can you just help us understand what was the difference between what was expected and what they reported?
No, I can't comment on that because they need to release their official numbers. So what we said is our expectation of 118, and we've known this number from since the beginning of our due diligence. So I think they need to comment when they publish. Remember they're a separate company, and until we actually acquire them, I can't comment on somebody else's results. Sorry.
Understood. Okay, thank you so much.
Thanks.
There are no further questions on the line.
Thank you, Felicia. I just wanted to thank everyone for joining us today and for your patience, especially at the beginning of the call. As usual, if you have any other questions, please don't hesitate to contact us. Thank you.
Thank you.
Thanks.
Ladies and gentlemen, this concludes today's call. Thank you all for joining. You may now disconnect your lines.